Hello everyone. Last Friday we discussed about how SEBI is going to change the open interest calculation. In addition to that, SEBI also released another circular in which they highlighted the new single stock weightage cap on the non-benchmark index like Bank Nifty. Hence, in this video, first let's discuss about it and then we'll discuss our regular pre-market report for today, 2nd June 2025 for the Indian stock market in terms of Nifty and Bank Nifty. If required, please pause and have a look. These are the top 10 Bank Nifty stocks and its present weightage. In addition to these 10 stocks, the other two are Punjab National Bank and Canara Bank. Here the weightage table, I took it from the official NSE website fact sheet. If anyone fancies seeing it, please have a go. I will attach the link in the pinned comment. Now coming to the topic. At present, there are 7 criteria to select the stock in Bank Nifty and its weightage. Again, if required, please pause and have a look. Here, the new changes are applicable to this 6th and 7th criteria. First, let's look at the 6th criteria. At present, Bank Nifty should consist of minimum 12 individual stocks and the weightage should be based on free float market capitalization. That now SEBI recommending it to change to 14 minimum individual stocks, 2 extra additional stocks. So, based on the present day free float market capitalization, it seems Yes Bank and Union Bank are expecting to join in the Bank Nifty index. And as per Business Standard website, this expects to bring fund inflow of near 900 crore rupees into Yes Bank and around 600 crore rupees into Union Bank of India. Then the 7th criteria, the present cap for any single stock is 33% of the weightage and the weightage of the top 3 stocks cumulatively, it should not be more than 62% at the time of rebalancing. Now here, that earlier 33% is changed to 20% and the 62% for the top 3 cumulative stock weightage dropped to just 45%. If you see the top weightage stocks in Bank Nifty, 2 of them are exceeding that 20% threshold. HDFC Bank near 28% weightage, whereas ICICI Bank around 25%. In addition with Axis Bank, it all together comes around 62%, which is the present limit. Now, SEBI directed NSE to reduce and comply towards the new norms, but not today, by November 3rd, 2025. So, NSE got 5 more months to adjust. And based on experience, market expect NSE to implement this new regulation from either July onwards or from August onwards. Hence, then what will be the impact? This expects to create passive stock selling for around 2,150 crore rupees from HDFC Bank and 1,670 crore rupees from ICICI Bank. According to me, it's not at all massive. The market cap of HDFC Bank is roughly 15 lakh crore rupees and the market cap of ICICI Bank is around 10 lakh crore rupees. So, this fund outflow was roughly only 0.15%, not even 0.5%. Hence, I guess fundamentally this will do nothing on those. However, this is a huge negative from the psychological point of view and during weekend all the news website and most people were talking about it. So, potentially we can expect both these stocks to be on focus today. Moving to US, we know and we discussed in the week ahead video, last Friday Trump threatened China that they were not following the trade deal agreement kind of. Hence, for most part of the day, US market traded significantly negative. Nevertheless, US Fed favorite macro, good PC inflation, reversed most of the losses. If required, please pause and have a look. Top 2 is core PC inflation without food and fuel, whereas the bottom 2 is headline PC inflation with food and fuel. Core PC inflation came as 2.5%, which is below March month value and in line with the analyst expectation, which means it's dropping and it's good. Whereas the more good one is headline inflation, which came as just 2.1%, only 0.1% away from the Fed's 2% target. This is a very good macro, increased the confidence for the potential rate cut and closed the US market around flat. Dow Jones was up by 0.13%, S&P 500 closed around absolute flat and Nasdaq dropped 0.32%. In case of VIX, it was down 3% and moved near 18.5. In addition to those, then during weekend, Trump made another new threat that he was considering 50% tariff on steel and aluminum import into US. So we can expect steel stocks around the globe, which depends on the US export, will be on focus. Then in other news, yesterday Ukraine's over 100 drone attacked significant Russian air base and aircraft, which is a huge escalation in the recent days. Hence possibly global market might react for this, and at present US future market, all three major index is trading negative. About oil, for the third month in a row, OPEC plus countries agreed to increase the oil production by little over 400,000 barrels per day from July month onwards, which is in line with the expectation. So oil price increased by 2%. At the time of this video, WTI crude trading at $62 per barrel and Brent crude trading at $64 per barrel. Regarding Indian ADR, except HDFC Bank, all closed negative, especially the IT stocks, both of them even showing the negative arbitrage. On the other hand, both the banks indicating positive arbitrage. In line with that, on Saturday morning, GIFT Nifty closed at 24,897. Equating that with the spot market, it's indicating flat to positive opening. Moving on, about institution, last Friday was MSCI Index rebalancing implementation day. So the trade value of both FII and DII was at elevated level. As a net, FII net sold for 6,500 crore rupees and DII net bought for 9,100 crore rupees. Then coming to the derivative market, in the index options, out of near 60% call option open interest unwound on monthly expiry, last Friday 43% new call option open interest was added. Similarly, 30% new put option open interest was also added. Hence, at present, open interest volume is fairly developed. As an overview, retail people reduced their positivity by selling more call options and proprietary traders reduced their bearishness by buying those call options. Whereas in FII case, they are maintaining their neutral stance. So all of them having the net volatility weightage position near neutral, like less than 0.5%. But one thing to notice, both FII and proprietary traders in both call and put options, they are significantly net buyers. On the other hand, retail traders are client significantly net sellers. In addition, if required, please pause and have a look. This is the future open interest position stance. Altogether, only retail traders stands showing neutral with positive bias and expecting a range bound, whereas on the other hand, both proprietary traders and FII neutral with negative bias and expecting a breakout on either side. As a summary, US Trump threat on China, Trump threat on steel additional tariff, Russia-Ukraine escalation, US future market negativity, ICICI Bank and HDFC Bank weightage reduction in Bank Nifty, and negative FII open interest position, which all against the market. However, on the positive side, there is a wider expectation that RBI will perform their third 25 basis point rate cut this coming Friday, and India's GDP grown by 7.4% on FY 2025 Q4, which is at least 1% GDP growth rate higher than what analysts expected. So, is it enough to save the Indian market today? Only time has to say. Then, as per stock open interest, Nykaa, Chambal Fertilizers, Mahanagar Gas, Alchem Lab, Birla Soft and RBL Bank were some of the 104 stocks that got an increase in open interest along with a decrease in price, indicating the short build-up. On the other hand, Manappuram Finance, Indian Bank, Inox Wind, BSE, SBI and Union Bank are some of the 33 stocks that got an increase in open interest with a price increase, indicating the long build-up. About the things to look out, today Chinese market is on holiday. Then about macro, first at 10:30 am, India's manufacturing PMI data is due, and as we discussed on the week ahead video, market expects good growth in the sub-metric like good order book and good export growth. Then in the afternoon between 1 to 2 pm, Germany, France and UK manufacturing PMI data is due to release, and in the night for US, their PMI data, Fed Chairman speech in the conference and any Trump activities are some of the things we need to keep an eye out today. Coming to technical, last Friday Nifty opened 20 points gap down and was range bound throughout the session with negative bias and then closed lower at 24,750. Thus on the daily chart, Nifty formed a bearish candle with minor upper and lower shadow resembling an inside bar type pattern indicating weakness amid range bound trading. However, it sustained above the midline of the Bollinger Band even though it remained within the previous day's range. Hence, the immediate support is at 24,700 and a fall below this level could push the Nifty down to 24,500. On the upside, 24,800 remains the stiff resistance. In case of Bank Nifty, it opened 70 points gap up and outperformed Nifty, then closed at 55,750. Thus on the daily daily chart, Bank Nifty formed a bullish candle with a minor upper shadow and a long lower shadow, indicating buying interest at lower level. In addition, it defended 10-day exponential moving average with RSI more than 60 mark with a positive crossover, suggesting a further uptrend in the index. Hence, as an overall, Bank Nifty consistently facing resistance in 55,800 to 55,900 range, and a move above this level could lead to breakout and possibly a new leg of up move, along with record highs. As per the options front, the maximum call option open interest was at 25,500 strike, followed by 25,000 and 24,800, with the maximum new call option rating at 25,500 strike and then 24,800 and 25,700. On the put side, the maximum open interest was at 24,000 strike, followed by 24,800 and 24,400, with maximum new put option rating at 24,400 strike and then 24,000 and 23,900. Thus, from options data, it's indicated that Nifty might continue to trade in the range of 24,000 to 25,500 in the short term. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.